something we've been talking about in Bitcoin for a long time, and it's been fascinating to see it start to materialize. But I agree that I think it's only going to get more amplified, right? It's almost as if there's a growing audience inside of a theater, but a shrinking exit. And the realization among the audience members that they need to exit, right, out of fiat instrument A into Bitcoin. That message is spreading quickly, but the door is shrinking.
Yep.
And so the rush for the exits is going to be spectacular.
But there's a very unique aspect to Bitcoin, which I don't think a lot of people, realize. And that is that with other commodities, they can be consumed, right? Gold is consumed for industrial purposes, jewelry, et cetera. Oil is consumed, metals, et cetera. And with financial instruments like stocks, they're driven based on the performance of the companies that the shares represent. And this argument that people have had for years that, well, Bitcoin isn't backed by anything. Bitcoin doesn't represent anything. Here's the beauty of that. And that is that Bitcoin trades purely based on the sentiment people have in its value and its scarcity, period. That's it. And so it's a much more pure form of investment. And when you see Bitcoin move, it has 2 times the volatility of an S&P or a NASDAQ, but look at how fast it bounces back, right? If Tesla produces bad numbers, the stock drops, you have to wait till the next earnings before the stock likely starts rolling back up again. Mt. Gox, or the state, the German state that sold all this Bitcoin a couple of weeks ago, price dropped, came right back up. Right? You look at the dips we've had and the amount of volume of Bitcoin that's gone into the market that's been absorbed quickly, and the prices come right back up.
Yeah.
That speaks to the amount of demand there is for Bitcoin. And that speaks to the health of the Bitcoin liquidity market today. Right? And I think that the concept we've had of these cycles that we've had before, 4-year cycles, and the miners are going to capitulate. The miners' impact on the price of Bitcoin today is insignificant, other than miners holding a lot of Bitcoin and selling. But the amount of Bitcoin miners produce daily that is sold into the market is becoming a more and more insignificant piece of the equation. And so that leaves just pure supply and demand.
Right. That's a great point. So it's purely sentiment driven. And on the other side of that, so you could also say it's like the credibility of Bitcoin's monetary properties, basically, or what it's trading based on.
Exactly.
And the credibility increases day after day, and the integrity of the network, because is doing exactly what it says it will do, basically, right? It's open source software. You get the Lindy effect working for you, where it's like been around longer, so people start to think of it more as a permanent feature of our lives. And it just keeps performing well. So the sentimentality around Bitcoin just goes up, and that is basically what drives the price.
Right. And the best thing about Bitcoin, and I'm the first person to say, you invest in Marathon stock, you're investing in the management team and my capability to run the company. Nobody runs Bitcoin.
Right. Yeah.
This is the purity, the beauty of Bitcoin as an investment asset. And this is why governments should feel comfortable investing in Bitcoin, because nobody controls it.
Yes.
Right?
Yeah.
It's down to pure supply and demand or market sentiment. Right?
Yeah, like gold again, right? This pure neutral reserve asset. Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money, and be sure to subscribe to this channel to stay connected.